Understanding cash flow and how it changes through your life is the foundation of your financial plan. What is cash flow? As the name suggests, it is the inflow and outflow of cash from your accounts. Just as a business needs to understand its income and expenses in order to assess its financial health, a person needs to know their cash flows in order to assess their own financial health. Now, when it comes to assessing your financial health, there are three important details your cash flow will tell you. The first detail is, will you have enough to cover your normal living expenses, such as housing, healthcare, etc., from now until the end of your life, which is projected to be 90 years for most individuals. The second benefit is that it tells us if you will have enough money to cover the financial goals and milestones, such as sending your kids to college or buying a new investment property or taking a pay cut or retiring at some point. If you're a business owner, this could be selling your business or starting a new business. And if not, the cash flow helps us understand how much we need to save and invest today in order to achieve those goals, or if we need to modify those goals. The third important detail is it helps us make key decisions, such as should you take that new loan, or should you sell your business at a certain price that you were offered. You'll be able to see the impact of those choices in your cash flow and in relation to your other financial goals, and that'll give you the clarity you need to make the right decision. Now, those are lots of benefits of a cash flow, but for a cash flow to actually be accurate enough, it must have these three features. Number one, it must take our whole life into account, from now until the end of life, which is projected to be up to 90 years for most individuals. Secondly, it's not enough just to have assets. We must also have liquidity to be able to spend. The second feature your cash flow plan has to have is that it needs to be comprehensive, meaning it has to take into account all the income and expenses. That is not just living expenses, but also taxes and healthcare expenses. In my experience, people always underestimate their expenses. The third feature is that it must take inflation into account. College is going to cost a lot more 18 years down the road than it does today. So we need to make sure we're saving and investing enough to be able to pay for the big expenses in the future. Now let's look at a sample cash flow plan. This is a sample cash flow plan for a client. This is a couple. It starts from today when the clients are 44 and 42 years old and goes all the way to when they're 90 years. Here is your income, expenses, tax payment, and what's left over after all of it. The cash flow enables us to see if they'll have enough money to cover their living expenses from now until the end of life. It also helps us understand if they'll be able to meet their financial goals. The first financial goal for this client appears at this point, when their kids start going to college, and then later when they retire. Lastly, we're able to use the cash flow to evaluate the outcome of key financial decisions, such as should you pay off the mortgage? Can you take a pay cut and focus on other objectives, such as spending time with family or focusing on a different career? If you're a business owner, it could be, should you take that new business loan? Or how much do you need in order to sell your business? That was a sample cash flow plan that we do for our clients. Please let us know if you'd like a similar cash flow plan done for you as well.